Welcome back to Fast Market on the TV Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks, and having problems with which camera to look at, but we're figuring it out as we go. So Kevin's back in the studio. But now let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio, joining us. Welcome back to the show, Landon.
Hey guys, good to see you.
Good to see you too. So we're talking cruise lines. These things have been under pressure, Landon, for the most part of this year. It seems like bookings are up, but the shares are down pretty significantly. It seems like everybody wants to travel. Everybody wants to go on a trip. It seems like they're paying the higher prices. Why have cruise lines not done well? Are we seeing a deterioration as far as sentiment data goes for people that want to take a cruise?
You know, it's got to be so frustrating to be, for example, a Carnival investor with the stock at $10 now. I think it got as low as maybe 13 or so in the March drop. So we're talking March 2020 drop. So we're talking about a cruise line below where it was when cruises were shut down.
Yes.
They've since reopened. That's tough as an investor. Now, Royal Caribbean's doing a little bit better, just slightly above what the lows were back when everything was shut down. But still, as an investor, you have to think, restaurants are opening up, airplanes, everything's opening back up all over. So why has my cruise stock not recovered? And you know what? We're actually seeing significant increases in booking. We can see that in their data and in our data. Booking mentions are up about double year over year. And they're seeing higher booking rates versus 2019. And so the data itself looks pretty good. As far as people wanting to come back, there's a lot of pent-up demand for these products, and the happiness is very high. Carnivals are at 81%, Royal Caribbean's at 79%. So, what's not to love about going on a cruise? But it's just, we're not seeing it in the stock market, and I think that's one of the big concerns here is what is it that's causing this? I think that, was it last week that Royal Caribbean issued new debt, and I think that pulled all of them down. It's giving a lot of concern as to how sustainable these companies are, and I think it just has to do with the fact that they were shut down for so long. They're running on, just like most businesses, a set margin where you have to make so much money. And if you just shut everything down for a very long period of time, it's going to be hugely detrimental to your company. It's not just something that you can flip the switch and come back on. That plus all of the macro stuff, right? You can mention this with just about any company, but inflation, supply shortages, labor market issues, all of that's going to affect them, not to mention gasoline and oil prices. It's very difficult business to be in when you're coming off of being shut down for so long. So I think that's just, they're still recovering from it. That's the idea, but the demand is there. So we feel like over time, these companies can get back to where they were. And frankly, if you're talking about, between the two, Carnival looks a lot better than Royal Caribbean in our data. The earnings score is stronger. The Royal Caribbean earnings score is pretty low. The happiness is stronger on Carnival. And with the stock price, like I said, under the low of when things were shut down, I think this could be a good buying opportunity for a long-term investment. I might want to wait a little bit to see them, gain some traction. But if you're kind of a bargain hunter and you don't mind a little risk, I don't hate buying it here. That is Carnival. I think Royal Caribbean I'd shy away from a little bit. But again, at $10 where it was 13 at the lows, maybe it's a little bit underpriced at this level.
Landon, you have to be careful. First and foremost, if you badmouth the cruise lines, they will throw you out of Florida, just so you know. You have to be very positive about the cruise lines. And if you want to know the immense business that you're in, you just take a drive down the MacArthur Causeway on any day and see the parking lot of cruise ships that come in and out of that on a daily basis, because this is a very polarizing sector of the economy. You either love them or you don't. And the people that love cruise lines will never stop taking cruises. And they just came out with pretty good news today. They're removing more COVID restrictions for anyone under 12. I think that this sector of the economy, this group of stocks, everything about their business in terms of demand is getting better. But raising cash, understanding that this is a long haul play for these companies to get out of problems and improve their balance sheets, and the fact that the overall economy with inflation and, all the other issues and high gas prices keeps throwing obstacles in their way. I think raising cash for the long haul is probably a good idea. Maybe not great for the stock overall, as all these stocks sold off on that news, Landon, but don't you think, take aside the fact that they all needed to raise cash and they're all still losing money. A lot of analysts saying that these stocks are all about to turn cash flow positive and profitable coming up in the next quarter, Landon. So if that's the case, isn't this a place where you might want to start to look at these stocks a little harder?
I think so. I think you make a great argument. And frankly, what else could these companies have thrown at them, right? I mean, they survive so much when it comes to macro events and political this and laws, all kinds of stuff that they had to get through. And now they're coming out the other side and they're saying, hey, we need a little bit more money to get back to profitability. And the stock is just extremely low, I think undervalued probably, if you look at it that way. And this, like I said, this could be the time, like we look back and say, wow, Carnival was at $10 back then. That's insane. So I do like it long term. I agree. I'm about 35, 40 minutes away from that. Every time I drive by these giant ships,
yep,
I'm just
they're
like,
everywhere.
Oh my God, it's unbelievable. They're printing cash.
Yep.
If they can fill up, right? They have to be full, and they haven't been full. They're monstrous depreciating assets, very, very large, and they're losing money just sitting there over the last 2 years, and now they're starting to get to where they can go out and have every room booked, and that's what they need. And once they get to that level and they get things back to normal, they're going to get back to printing cash. So I like the business overall. Long term, I think that right now investors are a little bit scared, and reasonably so. I think it makes a lot of sense to be scared, but I don't think they're going anywhere. I think they're sticking around for the long term. And frankly, I don't know what else could be thrown at them. So if there's another surprise macro event coming around the corner, okay, I can see the fear, but I feel like we've shot all our bullets at these companies and they've survived. And now it's time to maybe think about investing as a, oversold type situation.
Well, I look at it this way. If there's anything else that can be thrown at them, Landon, it's going to be debt load. Because if you look at Norwegian, they've got about $14.3 billion in debt, $23 billion for Royal Caribbean, and about $36 billion for Carnival. So these companies had to take on huge debt loads just to survive, right? And then at the same time, you've got the Fed. Couple of 75 basis point rate hikes doesn't help their debt load and the ability for them to pay that back. And if the consumer's getting stretched left and right on every inflationary point, at some juncture, I've already done it with flights. I'm not flying anywhere just because flights are 3 times as much as they were in 2019. If you keep raising prices on some product that people want to go on, right? Will you look at your data and say everybody's talking about it, sentiment data is like, hey, we're high on cruise lines, but are they actually going?
Yeah, so I think that's the key, right? So the last big bullet is, are we headed for a real severe type of recession? So we're already in a recession. We're moving in that direction. If you get to the point where the lower cost cruise line, which is Carnival, which is the family fun one, it's the cheaper one, it's going to be the one that has the most sensitivity to price, that clientele. If we get into that point where everybody's looking for work and numbers are up, inflation's up, your money doesn't go as far, you got to start cutting back, then you're right. I think that's the last bullet that scares investors, is these cruise lines they're going to be the ones that are cut, because vacations are often the thing you cut first. We saw that with in COVID, we saw a huge resurgence of road trips. A lot of that obviously had to do with airplanes being shut down, but that is in the back of people's minds as an option. Is like, well, you know what? Instead of flying down to Florida and hopping on a cruise ship, why don't we just drive up to, fill in the blank, the nearest big city that has some cool things going on. So there's ways to save money as a family, and I think that is probably the reason why Carnival is doing worse on a stock market basis than its competitor Royal Caribbean, who is the more expensive brand. The people are going to be less sensitive to the effects of a recession. So there's the counter argument. I think it's a great one. I think that's the one that kind of gives investors pause. If we can start to see an economy that turns around, then this is the bottom for the cruise lines. If we're headed lower, then you're right. There is possibly more downside for these.
Yeah, they've been beaten up. But now you keep talking about Royal Caribbean and Carnival. Do you guys have anything on a Norwegian? Because they've got the least amount of debt and least amount of ships. Also, they're a smaller bid player in this space. Do you have an earnings score for Norwegian?
We don't have an earnings score for Norwegian. We don't officially cover them. We've got data on them. It's somewhere in between the two, Caribbean and Royal Caribbean and Carnival. But I can tell you they are I would say even less affected by price sensitivity in clients. So among the three, I know I've been talking about Carnival as the one that looks to be the most oversold, but I would say that they are the ones that are most susceptible to families deciding to cut back on expenses. So, but between the three, and I know we don't cover Norwegian officially, but we've looked at the data. Between the three, Carnival is doing the best on a demand basis. And so that's where, if I had to pick one, that's where I'd put my money. But I might want to wait just a little bit and see some more numbers from the economy just to make sure that we're coming out of this thing.
Yep. All right. Great stuff as always, Landon. Appreciate it. Good data on the cruise sector at this point. Have a great day.
Thanks, guys.
All right, that's Landon Swan, the co-founder of LikeFolio, giving us the data on the cruise sector.